money should be sound. Now, traditionally, the Austrian school would be gold bugs. They'd be talking about gold as a store of value, as a way to issue credit against if you needed to, but it has a limited supply. So you can rely on it as a store of value. Sound money is not fiat by decree. The paper money that governments had today that they can inflate at will. Now, another way of thinking about this is hard money versus soft, and hard money and sound money are the same thing. Now, from the Austrian perspective, inflation is theft. What? Imagine that. Theft. All of these people, the experts, they get up and they say, oh, we've done so well. We've kept the CPI within 3.5% this year. Well, from an Austrian perspective, that means everyone's agreeing to having 3.5% of their stuff stolen, right? So inflation is theft. It devalues savings, punishes savers, and benefits debtors. Now, who are the biggest debtors in these economies? The credit-based system that's grown up over the last 50 years? Governments. And what a surprise. They don't allow, no, that's not the right word. They choose to have Keynesian economic theory in their university degrees, that they fund the academic world rather than having the Austrian school. What a surprise that is. So sound money, it forces fiscal discipline. So what's an example? Imagine your piggy bank is shrinking every single year in purchasing power due to the money printing. Well, if your piggy bank was gold or Bitcoin as sound money, well, there are alternatives that preserve your purchasing power. Now, it's very, very core insight as well. It's this idea of like the business cycle. The boom bust periods, like the Great Depression or the Roaring Twenties or the global financial crisis or whatever it is that comes up. The Austrian school is very clear about this. It's like cheap fiat credit creates booms. It pushes the economy artificially up, which then bursts into a massive downturn and a bust. Why? Why would you purposely do that to an economy? Wouldn't it be much easier if we had a sound money upon which to do all the transactions that we want to? So how has inflation hit your wallet? Like, when you think about that, like, how much more is your beef this year? How much higher is the house you want to buy? Is the car you want to get at the same price as the previous year? And think through, like, why would, if you had an Austrian School of Economics background, why would you love Bitcoin?